Okay, so hello everyone, and welcome back to our second session in financial accounting. Okay, in the first session, we are discussing certain principles, assumptions, okay, the basic parts, okay, why FA is needed, okay, what are the objectives of it, okay, why actually we need to record each and everything, okay, in a more systematic manner, okay, what actually the uses of it, okay, for whom it serves as a report, okay, and we also talked about different fields of accounting, correct, like it begins with bookkeeping, then it comes to financial accounting, then there is cost accounting, then there is management accounting, okay. uh, Management accounting is more related towards the management or the internal affairs, okay, which imports data from both financial accounting and cost accounting. Then we are onto our basic assumptions. There we read about going concern concept, data entity will keep on going. Owners may come and go, but entity will keep on going. Then we discussed about business entity concept, a separate legal entity, which creates a distinctive identity between the business and the owner. Then we talked about a money measurement concept, where we said that all the transactions involving a monetary value should be recorded. Accrual concept, that means both the accounting should be done both on cash basis and accrual basis. That is, if you have done some expenses, do record it. But suppose, for an example, if you have received some services and you are yet to pay the amount, so that also has to be recorded. That is accrual basis, means due basis as well. Then we talked about accounting period concept. Okay, going concern concept says on that the life of a business is is unlimited, correct? But accounting period concept says that the life has to be divided on a shorter term period, okay, so as to assess the overall, so that after a fixed period of time or a fixed period or a fixed period, we can assess the position and the functionality of the businesses, correct? There we saw that there is a calendar year and there are financial years, okay, so any one of maybe four principles. Then we move on to the principles of accounting, where at first we talked about conservatism concept, which says that conservatism or a kind of prudence, which actually says that you can recognize your future losses, and that is the reason why we do see reserves, okay, provisions in accounting, but we never ever see anything related to profit. So you can anticipate your future losses, but you cannot anticipate your future profits or gains. Then we talked about matching concept. Matching concept clearly says that each and every transaction has a revenue effect, okay, and an expense effect. Both has to be recorded and both are to be given effect in the books. Then we talked about dual aspect concept, which says that asset is equal to liability plus capital. Okay, capital here is nothing but the owner's equity. Liability means functions to be performed, and asset means what we own. Correct. Then we talked about historical cost concept, where there we also had a debate that uh, does actually that it says that the book in the balance sheet, whatever assets are there, it has to be on the historical cost. Correct. You cannot revise the cost according to the market conditions. On that also we had a bit debate that what actually it should be. Okay, does it shows the correct position of the business, or there is some issue with that? We discussed on that as well. Then we talked about balance sheet equation concept, which nothing which says that how your balance sheet should look like, so as to determine the correct financial position or to convey the correct message that you want the outsiders to get from your company. That is, expenses plus losses plus asset is equal to revenue plus profit plus liability. Okay, if you analyze the balance sheet, you will see that these are the only things which are how the asset and the liability sides look like. Okay, now we'll move further with our discussions, and we'll discuss a few more principles or conventions. The first one will be full disclosure concept. What actually it means to say, see, we say now that that our financial statement, okay, will serve as a information to the outsider, to the stakeholders, correct, uh, to the so just a second. If you remember, we discussed about a concept that if today I ask you to invest in a company or an organization, what you will do? So everyone replied that they will go through their financial statements, they'll go through their cash flows and all. Correct. So, so that balance sheet or that financial statement should depict all the details, correct, so as to make you enable, correct. Now, for an example, okay, okay, we'll not talk about the example. Okay, so full disclosure concept says the same. It says that all important and all significant informations, okay, that are needed to be disclosed. Okay, we'll read about AS1, okay, accounting standard 1, later at a later part, where it says that all means what process you have followed, correct. Now on, let's talk about the depreciation only. We know depreciation have uh, different methods, correct. The most popular two are written down value or written down value and straight line method, correct. These are the more popular two, but there are more. So what actually the company is following, it has to be disclosed. So full disclosure concept or ES1 says the one and the same thing, that each and every significant information, okay, that 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 has been represented, that has been followed while preparing the financial statement should be disclosed. Okay, now the next concept will be, okay, not a principle, but it can be a kind of convention as well. It is materiality. Okay, what actually materiality means is defined. Now, see, if you remember, I discussed example where I said that there is a transaction which is evolving cash, but it is having no effect on our assets or profit. For example, you have converted 500 rupees note into multiple of 100 notes, 500 notes, correct. So definitely it involves some monetary value. Okay, this transaction has some monetary value, but if you see the overall effect, there's nothing is happening, correct. So materiality also says the same. Okay, says that materiality says that each and every transactions, okay, depict depict the importance or should depict the effect which it is going to have on the profit, okay, on any of the thing that we have in our business. Okay, that may be on the asset, that may be on our profit, that may be on our revenue. Okay, it doesn't mean to say that, suppose for an example, in a large business entity, if there has been an expenses of 20 rupees, okay, you shouldn't record that. It doesn't says that. It says that every transactions or every event or every monetary transactions which is happening in the organization, which will have some effect, which will have some effect on the profitability or the financial position of the company, that has to be depicted with that much of importance. Yes, is that clear?
Yes, sir.
Okay. Okay. So now we'll move on to the next one. Just a second time. Okay. The next one is these all are kind of conventions also, you can say. Okay. It is consistency. Will anyone try with that word consistency? Consistency means what? Regularization. Correct. Something which has which we have to do. Like we say na, that to pass CMA exam. Okay. practice, consistency in practice is needed. Correct. So similar has a meaning over here as well. It says that suppose for an example, an organization has adopted a policy, okay, of say for example a particular method, okay, of deciding a revenue or an income. Correct. Um, okay, the best example will be deciding the useful life of an asset. Suppose for an example, okay, we have purchased a machinery and our organization, okay, as per our organization rules and regulation, we assume its life to be for 5 years. Correct. Now, suppose for an example, after 2 years, if I purchase another asset of a similar kind, okay, so by default, it is ought to be that it will have a useful life of 5 years. Correct. So what did I convey from here is that if an organization is adopting a process, or I can say is adopting an assumption, okay, for determining the revenue or income in a particular way, okay, so the same process has to be carried on from the year later on that as well. Okay, so for an example, the same example, that if you have uh, thought about machinery, okay, if you have thought about a machinery to be of 5 years, so for new machinery as well, it will be assumed that you are assuming its useful life for 5 years only, not more than that, not less than that. Okay, consistency says the same. Okay, the next one and the last one will be timeless concept. Okay, now not timeless, sorry, it will be timeless concept. It has a very clear and straightforward meaning. Okay. Now, if you remember, if you have done a journal and if you remember the same, you would definitely remember that you also record the date on it. Correct. And as per this concept as well, it says that each and everything has to be recorded in a proper time. Correct. So if something is happening at the beginning of the year, that must be reflected at top. Okay, and if something is just happening a day before the closure of the accounts, so that will be represented at last, correct? And things which are happening in between that. So simple meaning is that each and every transactions event, okay, whatever you are recording having a monetary value should be recorded at proper time. Okay, so as to enable one to know that when actually did it happen. Correct. Now, for an example, if a company has taken a loan, correct. Loan is a perfect example because here interest and everything has to be calculated at the end of the year. So that must so the date on which the loan has been taken should be clearly mentioned in your financial statement so as to calculate each and everything in a more proper way. Okay, so timeliness is nothing but it says that each and everything is be recorded on proper time. Okay, along with the date. Okay, so in journal as well, in ledger as well, we do this. Correct. We mention the date when actually it did happen. It has happened. Okay, this time concept is not for the financial statement because profit and loss. Okay, balance sheet does not really depicts a date, but your journal, your ledger, correct, they do depict that when actually it has happened. We mentioned the date as well. Okay. Okay, so after all principles, conventions, assumptions, okay, we'll move on to We'll move on to accounting process. Okay, process which I mean to say is approach. Okay, so there are generally two approach. Okay, both of them are one and the same, but yes, they have a little bit of uh, statement difference. One is okay, one is our older ones. British approach. Okay, in this British approach, what actually happens here? Accounts are classified into three types. Okay, personal account, real account, and nominal account. Each has their own set of rules, which I mean to say golden rule or golden principles. So for personal, it is, as said by Sanjana, it is debit the receiver and credit the giver. For real account, it will be debit what comes in, credit what goes out. What is this? What goes out. And for nominal account, debit all expenses or losses, credit all income or gains. Correct? This is what you said, Sanjana. Correct?
Yes, sir.
Okay. The next approach is a bit modern and has another name as well. American approach, or we also call it as modern approach. American approach or modern approach. So here actually accounts are not divided. Okay, here actually the subdivisions are like, for assets there are different set of rules. For liabilities there are different set of rules. For capital there are different set of rules. Okay, for income there is a different set of rule, and for expense as well there is a different set of rule. You will say that you will see that it has a similar meaning only. Okay, but the statement form has changed. Okay, anyone knows this? What rules to be applied for asset? Okay, I'm writing a bit more. After that, you might increase. Increase in asset will be what, or decrease in asset will be what? Try it once if you want to. What actually has to be done if asset increases? Debit or credit?
Debit.
Debit. And if it decreases?
Credit.
Credit. Now the same goes with the liability. If the liability increases, what has to be done?
Credit.
If liability increases, it has to be credit. Correct? And if decreases, then
Debit.
debit. Okay. So for capital, if capital increases or decreases?
Increase credit, decrease debit.
Increase credit, decrease debit. Correct. Okay. For income, if income increases or decreases?
Increase credit, decrease debit.
Increase credit, decrease debit. Okay, so for expense, if it increases or it decreases,
Increase debit, decrease credit.
increase debit, decrease. Okay, so these are the two different approach. I think everyone else has understood this, correct? So what actually happens that in British approach or traditional approach, we actually divide, okay, into three accounts. That is personal, okay, which belongs to a person. Real account means where acquisitions, assets, okay, and nominal account. Okay, here golden rules are followed. Okay, and another approach, American approach, is although the same. Okay, if you go by the effect of both the old and American approach, okay, same entries will be passed. Okay, but only the statement wise form has changed. Here no account is not there. Here it is divided into five categories: asset, liability, capital, income, expense, and each of them increase and decrease will affect the debit or credit in the organizations, correct? Now, okay, now just to check how good you all are in journal entries, okay, I'll just write few and okay, if I say started business with rupees 10 lakh, what journal entry will be passed?
So cash account debit to capital account.
Cash account debit to capital account. Okay, now I say that purchased furniture what will be the transaction? What will be the journal entry?
Furniture account debit to Mr. Ram.
So I think it is known by all, correct? Journal entries are known by all. Okay, so I'll not mm, spend much time over here. Okay, and I'll move ahead. Check what else is. Okay, now we'll move our discussions to the further topic. Okay, I think journal entries is known by all. Okay, and to check it, okay, whenever we'll do accounting, this journal entries are only there, will be there, which will help us to do accounting in a more better way. Now will discuss about capital transaction and revenue. Capital transaction and revenue transaction. In this also we'll discuss at first okay, in this as well at first we'll discuss about capital expenditure and revenue expenditure. What is capital expenditure and what is revenue expenditure? Who is going to help me? Yes, who will help me?
So
What is cap?
Capital expenditure is like we are spending the money for buying the asset which will be useful for more than one accounting period.
Correct. Correct.
And the revenue or the expenses which is incurred against the profit, or it can be also says a revenue expenditure is recurring in nature actually.
Correct. Recurring in nature, and it will have a benefit of less than one accounting period.
Yeah,
Correct.
yeah.
Very correct. Very correct. Okay. Now, okay, both the points which Manisha gave was perfectly correct. Okay, so capital expenditure is mainly is an expenditure which is incurred, or the economic benefit from which can be enjoyed for more than one accounting period, or will be enjoyed for more than one accounting period. For example, investment in some asset, purchase of machinery and all. And revenue expenditure is our like day-to-day operation expenses. Okay, these are recurring in nature, but capital expenditure are non-recurring in nature. Okay, capital expenditure is basically are the expenses that we see in our balance sheet. Okay, or capitalization will be done, and revenue expenditure is like what we treat in profit and loss account and everywhere. Okay. Okay, best example of capital expenditure.
Purchase
Okay,
of
this
assets.
correct. I also thought that what I'm asking. Okay. Okay. I'm sorry for this question. Okay, so capital expenditure, revenue expenditure, well said. Now we'll discuss capital capital receipt and revenue receipt. Who will help me out? What actually is a capital receipt and what actually is a revenue receipt? What happened? It has the same meaning. Okay, only there it was expenditure and here it is income. The only change is lies over there. That in capital expenditure and revenue expenditure, we talk in accordance with the expenses we made, and here we're talking about the incomes. Correct. So best example of capital asset, capital receipt will be
The
from
capital invested in the business by the
correct. Correct. And revenue, what will be the revenue? Just an example of revenue receipt.
revenue
In trading and PL, what you write at the first? Buy.
sales.
Yeah, correct. Sales. So income, okay. Or see, in revenue, it will have a short-term effect, okay, or which is more recurring in nature, sales, okay. And whenever we talk about expenses, we'll go to the revenue expenditure. But whenever we'll talk about income, we'll come to the revenue receipt. Similarly, with the capital, purchase of some asset is in capital expenditure, but investing cash in business, okay, or doing some investment in some means company's investment will all be capital receipt. Okay. Now, if I write this one, I think you will more be confused. Capital profit and revenue profit. Anyone knows this? What actually it is? After that, we'll talk about this.
So capital profit is just my, like it's my
Yeah,
just
correct. No issues. Try it.
capital profit will occur when we sell the assets with the profits.
Okay.
Uh,
Not bad.
Revenue profits, I don't have idea, sir. Sorry.
Okay. No, correct. It was not wrong. Okay, the ideology was correct. See, capital profit and revenue profit has just one distinction. Okay, otherwise the point remains the same. It is recurring in nature, it is non-recurring in nature. Okay, in every cases. The only difference is there. Revenue profit is the profit that is earned from the core business activity. Correct. So if my business is of furniture, then sale of furniture is my okay, whatever profit I'll earn from sale of furniture, that will be my revenue profit. And capital profit, as said by you, is those profit earned, which is earned from non-operating activities of the business. Okay, the rest remains the same. Now, capital profit can also be seen from that point of view that it is a kind of profit, okay, which is not from your core business activity. Correct. Now, I'm writing something. Okay, say what it is: capital profit or revenue profit. Profit prior to commencement of business. What it will be? Yes. First, read out these 4 examples which I have written, and then say what you feel like. These all are capital profit, or some of them are revenue, or something. That's
So it's capital profit.
all 4.
Yeah, all 4.
All 4. Why you said that? Because these are not from their core business activity. Correct. And that is what it is all about. Capital profit, like profit prior to commencement of business. See, definitely business has not started. So how can we think about core business activity? Premium received on issue of shares. Correct. So extra amount which you are receiving, this is not our core activity. Correct. This is additional profit that we are having. Okay, profit made on revaluation of assets. So if you revalued an asset and now it has increased, so whatever profit you have earned. Redemption on securities, redemption of securities on discount. Actually, I mean to say debentures. Okay, so these all are capital profit. So capital profits are basically those profits, okay, which is earned by the business, not from their core business activity, but from additional activity or some secondary activity. But revenue profits are those profits which are earned from your core business activity or your operating activities. Yes, ladies and gentlemen, is it clear to everyone?
Yes, sir.
Okay, now if you see your mat, you will find that there are n number of examples. Okay, but because these are not that important, so I leave it on your part that please do solve those examples. Okay, and in case of doubt, I'm there to help you out. Okay. Okay, so now we'll start with our depreciation. Okay, now what actually, if I ask you to define you the depreciation, you will say that depreciation is what is nothing but the reduction in the value of asset okay, over its useful life. Correct. The period at which we'll keep on using it every year, something will get reduced. Correct. Because we know that as well, that its uses will also get reduced. Correct. For an example, a machinery which I purchased 10 years ago and the same machinery which I purchased today. Okay, definitely today's machinery will perform much more better than 10 years before machine. Correct. Why? Because it has been degraded. Correct. Or its value has, its potential, its efficiency, its value, all have decreased now. That is what depreciation is all about. Depreciation is what? Depreciation is wear and tear of asset over its useful span of life. Useful span of life. Correct. You all agree to it. Now, what we are studying over here is not actually depreciation. We are going to study how to calculate depreciation. How to calculate it? Okay, sir, you said that, okay, there will be wear and tear. Okay. Don't you think that comparing a production wise is much more easy rather than comparing it value wise? Yes, do you all agree with the statement what I said? Comparing it as per the production wise is much more easier than comparing it as per the value wise. Now, how is to be done the production wise? So simply take 3 years before data, that what actually it used to produce, and see today what it is able to produce. Correct. We can check, and whatever the difference is there, we can say that, sir, it has decreased its production by 10, 15, 20 units. Correct. But if I ask you by value, that 3 years before I purchased that for 8 lakh rupees, so what it is value today? Here you will think, okay, how to calculate that. Correct. And that is what we are going to do over here. We are going to learn how to calculate depreciations. Okay. Now, before that, what actually are the causes for depreciation? We are going to discuss causes for depreciation. The causes for depreciation will be, you can classify it into two types. One will be internal. Okay, in internal, what it can be? One is that we discussed wear and tear, and that can be, one can be exhaustion, or you can say depletion. Okay, exhaustion or depletion means the more and more you use, or the more and more it tends to, the more and more we use, the more and more it tends to decrease more. Correct. The value or units or production is going to get down less and less. And wear and tear definitely is, okay, wear and tear and exhaustion, now you will feel like at some point they're the same. Correct. But that is not the same. Wear and tear actually mean to say, okay, suppose for an example, okay, this plant machineries, okay, furnitures, motor vehicles and all. Okay. Okay. Now, if I give a perfect example, rustic. Correct. In Hindi we say jung lag jana. Correct. Rusting. The iron gets rusted. Okay. Those all kind of things fall under wear and tear. But exhaustion is a complete example where you use more and more, so decrease more and more. Okay. And one was the internal, and what can be the external? External can be obsolescence, inadequacy. Obsolescence and inadequacy. What is obsolescence? Yes. What is obsolescence? How will you say that this is obsolete?
Discovery of new asset or
Correct. With inventions, suppose for the best example is that you go in the year 2003, the mobile phones which were available then is now obsolete. Correct? Why? Because more and more far and far better things have been introduced till today's. Correct? So obsolescence is word which is used with the technology or inventions. And what is inadequacy? Inadequacy. How will you define? Okay, let me only say inadequacy is nothing but the changes or the scale of production. Correct. So it might be possible that previous year the demand for our product was more and more. So we used to use the machine more and more. Correct. But today in the market demand has decreased. Correct. So my scale of production has been changed. Correct. So this is an inadequacy. There is no fixed level. Okay. How much to produce or not. Correct. Okay, you can add one more point to it, is time element. Because time is the most important element, na? Because whatever we are discussing that with time and time. Correct. So depreciation generally occurs due to time only, because whenever we try to compare value or production by whatever way, we say that go into that year and check, go into some previous years and check. Correct. So time is the most basic element why actually depreciation is happening. Yes, you all agree? Okay, is depreciation charge against profit or appropriation of profit? Is depreciation a charge against profit item or an appropriation of profit? Who will try?
profit.
What profit? Is charge against profit?
Yeah. So charge against profit.
So it's appropriation of profit.
Correct. Now this is good. Two examples, two replies. Yes, Alan and Murli, what do you guys think? Then I'll move ahead with the discussion. This is good. When I get two different answers, that means I have to correct it. Now I get the teacher feeling that I have to correct it. When you give correct, then there's no credit for me. Okay, it is a get ready. You are going to get the answer. Okay, I think I have got one. Repeat point 2. Okay. So Murli, here it was external factor. What is obsolescence and inadequacy? Obsolescence is what? Inventions or new technologies. Correct. Once a newer technology with a better features and facilities are available, the older one becomes obsolescence. Correct. And inadequacy is nothing but changes in the scale of production. When you need more, you produce more. When you need less, you produce less. Correct. So that also somehow affects on the depreciation. Correct. Because we say now once anything is used for its full capacity for maximum time, it tends to what I can say, deplete more and more. Correct. Okay, so the answer is depreciation is charge against profit. Okay, Sanjana, it's charge against profit.
Yes, sir.
Okay, now when we were to the point how to calculate depreciation. So there are I cannot even sum up how many ways are there in total, but yes, there are different ways, okay, based on different elements. Now, we will discuss those with elements, okay. Right now we are discussing with the process, the names, okay, but slowly we'll move on to each and every topic. If I talk about from time base, then there are 3 fixed installment method, reducing balance method, sum of years digit method. I think these names are known by you all, correct? Double declining method. I think these names are known by you, correct? At least these two are definitely fixed installment and reducing balance method. Nothing but straight line method and written down value method. Okay, these all are on basis of time. Now, if on the basis of use, working hours method. Okay, by the name only, it suggests that what actually it is trying to say. Correct. Working hour method. Working hour method means how long does a machinery runs. Correct. What has been its total hour till date when it has run. Mileage method. Now, with the word mileage is more familiar with cars, correct? ये कार कितना देती है? Just a second. Depletion service method. Okay, and more. Okay, here we do not have any end, but yes, these 3. I think 1 or 2 examples are given in the book, so I've just taken the name of it. Okay. Okay, one by one. See, you'll see now that maximum examples in the books are from straight line method or WDV method. Okay, some of digit, there are 1 or 2 examples, but double declining method, there is no example of it. Okay, but I'll try to bring out at least one example so that you get a better clarity that what actually has to be done. Okay, so along with this, now there is one accounting standard is also associated. Okay, with depreciation, accounting standard 10 is associated. Okay, but AS10 we will not discuss right now. Okay, because it's too early with you to discuss the AS. Okay, so once we move on to the AS part, I'll discuss that again, and there again I'll take this reference of the depreciation chapter, that what we did and what we didn't. Okay, so what we'll do, we'll start our discussions with straight line method and fixed installment method. Okay, this is a very simple kind of method. Okay, you all know this. Okay, sometime somewhere in your life you have definitely, if you have done accounting, then you must have faced this. Okay, here actually what happens. Okay, so what I'll do, I'll just quickly move on to one example given in the book. Okay, see, first I will see what actually happens now. Depreciation is calculated on the cost of machinery. Okay, this is the only point. Okay, which this is the one and only point which will help you. If you see the example after this, now you will get a clear distinctive that what actually is the straight line and what are the other methods that we are talking about. Here, depreciation is always calculated on the cost of machinery. Now, for an example, okay, a machinery, okay, cost of machinery is, say for example, it is 20 lakh, correct? I'm saying depreciation is at the rate of, say for example, it is 10%. How long the machinery will run? Or what would be is useful life? Will anyone try? So how to calculate depreciation? Okay. How to calculate the depreciation on it? So what you will do? Okay, so it will be so for first year, correct? So I'm just writing first at the beginning. What it will be? Correct? This
Yes,
is how I'll calculate. So what value will it come?
2 lakhs.
Correct. So this is the first year depreciation. Correct? What will be the second year? What will be correct? What do you think? Should I calculate or everything will be equal?
Everything will be 2 lakh.
Everything will be 2 lakh. So one more point I can say that here, what to say? Yes. Can I write that or not?
Yes, sir.
Correct? So correct. So for second as well. Okay, if I have to write it again, it will be 20 into 10 again. Correct. So it will be 2 lakh again. So for the third, for the second, how long will it go?
For 10 years.
For 10 years. So here automatically the, what I can say, estimated life becomes 10 years. Yes, ladies and gentlemen. Okay, I'll stop my video. I think there's some lag over there. So I'll stop my video. Yes. Any doubt? Anyone?
No, sir.
Okay, so now we'll move on to the book and we'll see an example. Okay, fixed equal installment or straight line method. Okay. Teachers, a fixed portion of the cost of a fixed asset is allocated and charged as periodic depreciation. Okay, how to know what actually is the fixed portion? Here it will be given. Okay, but if I talk about from tax perspective, there we have to learn. We'll see that in DT. Such depreciation becomes an equal amount in each period. Okay, the formula for calculation of depreciation. Okay, we need not to see this. Okay. Okay, let's see the example. Okay, cost of machinery was this. Expenses incurred at the time of purchase to be capitalized 10,000. Estimated residual value is 20,000. Expected useful life in years is 8 years. Correct? Why do you think 8 years has been given? Why 8 years have been given? So as to know that what percentage it should be. Don't you think that? Because nowhere percentage is given. In the above example, the example which we discussed, here with rate we calculated the estimated life. Correct? Don't you think that if I would have given that 10 years is the life that I'm expecting, wouldn't you have been able to calculate this percentage? So same has to be done here. Okay, remember one thing. Okay, cost is always equal to, or what I mean to say that with along the cost na any incremental cost, or better to write not incremental. Okay, expenses relating to installation, okay, has to be added in the cost. Okay, I think you all know that, na? That in that expenses still is to installation, everything has to be added in the cost of the product. Correct. So here, if the cost is 90,000 and expenses relating to the installment is 10,000, so what actually is the cost, total cost? So here the total cost will be 1 lakh rupees. Correct. Now they're saying value, estimated residual value. Residual value is the scrap. Means after it is completely obsolete, if you sold it, we'll get a value of 20,000 rupees. So don't you think that has to be deducted from here? Let's first discuss. Do you feel like, yes sir, we need to deduct this? ये हमको हटाना चाहिए. Because this actually, it is not my cost, na? So it will give me something.
Yes, sir.
Okay, so along with that, okay, now I can write this fully. Along installation, less scrap value will equal to the actual cost of the machinery. Correct? So here in this example, what happened? 90,000 was our original cost, plus 10,000 were our expenses, less 20,000 was our residual value. So what actually becomes the cost of machinery? It becomes 80,000. Correct? Now the useful life is 8 years. Correct? So how to calculate the percentage? If I do cost by number of expected, what I'll get?
10,000.
10,000, correct? So every year, don't you think that every year 10,000 depreciation will be charged because this is fixed installment method or straight line method?
Yes, sir.
Correct. Now, what is 10,000 on 80,000? It is 10%,
Yes, sir.
correct? So from here, I can say that rate is 10%. Was that too tough to understand? How actually we calculated? I don't think that was tough, correct? Now let's come to the second example. Second one. Let me remove all this. See here, cost is 24,000, expenses incurred is 7,000, residual value is 3,100, and expected life is 6 years. Okay. So what will be the cost? It will be, help me out, 24,000 plus something has to be done, 7,000, this expenses, less the scrap value. Correct? What it will come?
27,900.
20?
27,900.
27,900. Correct? What is the expected life? 6 years.
Yes, sir.
Okay. So what I have to do to divide it by 6. So what is the depreciation amount we are getting?
4,650.
4,650. Now how to calculate the rate?
4,650 divided by 31,000 into
31,000. Correct. Correct.
15%.
15%. Anyone has any doubt how did we calculate it? Or anyone has any question on 31,000? Yes, Alan, Murli, Sanjana. You guys are clear with it?
Yes, sir.
Okay. 31,000 actually was our cost of asset. Okay. Because this residual value has to, this one, this actually was our 31,000. Okay. It has become mad. Okay. This is our 31,000. Okay. Now we can move on to the next one. Okay. Here cost is 1,05,000. 20,000 is the additional. 12,500 is the residual. Expected life is only 3 years. Correct. Let's do. What will be the cost? 1,05,000 plus 20,000. Okay. We'll deduct 12,500. What are you getting?
1,12,500.
1,12,500. Correct. What is the estimated life? 3 years. So what is the amount of depreciation we are getting?
37,500.
37?
37,500.
37,500. Okay. So what will be the rate of depreciation? This amount by this amount. Let me bring out my calculator as well. Help a bit.
18%, sir.
18%, correct? How did 18% came? It was 1,05,000 plus 20,000 divided by 37,500. Sorry. Okay.
So
I think
actually it's 30%, I think. So I'm sorry.
Yes, sir. It's 30%.
it's 30%. No? That's what
Yeah.
I'm also getting. Like 5,000 plus 20,000 was estimated cost. Correct. Divided by 37,000. I think in the book now, actually what they have done. Okay, don't compare it with the book, because see here the expected life for the third one is 3 years. Okay, but here they have taken 5 years. Correct. That's why there is a calculation difference. Okay, so it won't be 30% as well. It is around just a second. Okay, don't compare it with the book. Okay, because in the book they have taken the expected life to be 5 years. Okay, but here in question it is 3 years. Correct. So take it 3 years only. Let me check that above figure. With 3 it will be 37,500. That is correct. I'm not even getting how they have got this 18%.
Sir, they have they have divided 22,500 divided by 1,25,000.
Into 100. Nah, correct. But that also why I'm not getting. I think I'm doing some
Because
mistake.
they have taken the expected life to be 5. So they have divided 1,25,000 divided by 5.
Correct. I was dividing 37,500. Correct. So what will be the percentage for us? It will be
30%.
37,500 divided by 1,20,000. Yeah, it will be 30%. Okay. Don't match it with the book. It is 22,000. I took it 37,500. Okay. And even the next one also you cannot compare it because they have taken 10 years. Okay, but in question it's 5 years. Okay. So what has to be done over here? 250 plus this expenses minus 56,000. What it's coming to be?
2,24,000.
2,24,000. What is the expected life? It is 5 years. So what it will be?
44,800.
44,800. Correct. So what will be the rate? 253. No?
16%, sir.
Just a second. 16%. Correct. I just cross-checked it once. Okay. Everyone is matching. Yes. Okay. Correct. Okay. In the book, they have changed the useful life. Okay. They have taken the lives which was easy for them. Okay. So just change it once. Okay. In fact, you can do one thing. Na? At the below over here, na, I'll just write it once. Okay. Okay, leave it. No need to write. We can do it that anytime by ourselves. Okay, so this was okay to everybody, correct? Okay, here the date calculation is there. Okay, rate calculation. Let's read out the example. A machine is purchased for 7 lakh. Expenses incurred on its cartage and installation is 3 lakh rupees. Correct. So what actually becomes the cost is 7 lakh plus this 3 lakh means 10 lakh. Correct. Calculate the amount of depreciation at the rate of 20% per annum. This is per annum according to the straight line method for the first year ending 31st March 2014 if the machine is purchased on 1st April, 1st July, 1st October and 1st January. Okay, why actually these dates are given? Because here the depreciation 20% for the full year. Correct. So if any number of if any months are reducing, okay, we also have to reduce the depreciation rate. Yes. Okay, if you go by the book, you'll see that they have done longer things, but let's do it in very simple words. So what is the total cost to us? It is 7 lakh plus 3 lakh, that is in the installation cost. Correct. So it becomes 10 lakh. Okay, now it is 1st April 2013. Don't you think it is ending on 31st March? So it is April to March, correct? April to March. So it is full year. Yes,
Yes, sir.
this is a full year. So nothing more has to be done. It is 10 lakh into 20% straight away.
2 lakhs.
Correct? Yeah, but now see, it is now July. Correct? It is now July. So how many months it's there in the year? Sorry, how many months it is coming to be? It starts from April to March. So April it's not there. May it's not there. June it's not there. Correct? But from July it is there. So it is 9 months, if I'm not wrong. Correct me?
Yes, sir.
Correct. So what actually has to be done? It will be 10 lakh into, okay, like 20% into
9 by 12.
9 by 12. Correct.
It's 1 lakh 50, sir.
1 lakh 50. I'm not calculating. I hope 1 lakh 50. Correct. Okay. Now it comes to October. So 10 lakh into 20% into October, November, December, January, February, and March. So it is only 6 months.
Yes, sir. 6 months.
6 months. So it is 6 by 12 means just half of it. So it will be 1 lakh, I hope so.
Yes, sir. 1 lakh.
Now if you come to 1st January, it will only be 3 months. Correct. So 10 lakh into 20% into 3 by 12. 1/4 amount it will be.
It's 50,000.
50,000. Yes, is it clear to everybody? How did we calculate this? God. 9. Correct. Correct, Alan. Alan, if you are replying now, it's better that if you can put your mic on so that we can hear you promptly. Okay, and you can also participate. Sanjana, are you sleeping?
No, sir, I'm there.
Why are you not speaking then? I thought you are too tired then.
No.
You are our entrepreneur. You should not do like this. You'll set an example for the upcoming generations. Okay, so we are done with the straight line. Okay, this much of examples are there, but don't worry. Okay, I'll bring up some examples for you to practice. Okay, from different books, or maybe if there has been some question in the past, I'll figure it out I'll find it out, and today only I'll send it. Okay. So yes, now the time is that every day now I'll give you something to be done. Okay, because we have a day, we have classes a day, we're skipping a day, correct? So tomorrow we don't have any class, then day after tomorrow we have a session. Okay, so your homework will be that whatever one or two additional questions I'll send it to you for this straight line method only. You have to do that, and that general ledger and trial balance illustration. Okay, you all have to do it. Okay, and you need to send me the solutions personally. Okay, not in the group. Okay, and I'll revert you the feedback, what is wrong or what is correct. Okay, so for today we'll keep it up to straight line only, because we'll start the reducing balance method and the rest sum of digit methods. Only one or two examples are given in the book, so I'll brought out few more examples and we'll try to solve it in the session. Correct. So for today we'll keep it up to here only. Correct, otherwise your homework will increase. So we'll see you in the next session. Till then, bye bye, and thank you for joining.